Good afternoon and welcome to NYFP. As we round up the month of February, we are seeing the major U.S. stock averages manage to eke out a small gain. Joining me this afternoon is Sandra Navidi of BeyondGlobal. Good afternoon, Sandra. Thanks for joining me.
Hi, Remy.
Well, as we wrap up the month of February, we are already looking ahead to tomorrow's session. Now, March 1st does mark the Sequester deadline, and unless an agreement is reached, this means massive spending cuts will go into effect. What do you expect to see tomorrow?
I think it's highly unlikely that both parties will come to an agreement this last minute because negotiations are quite intricate and difficult. The parties are so far apart. What is more likely is that at some point when the pain starts to show from the cuts, that will bring the parties back to the table before people take onto the streets with pitchforks. But short term, I don't expect any agreement.
And Sandra, earlier today we got the release of fourth quarter 2012 GDP figures, and we did see a small expansion up just 0.1%, and that is lower than the third quarter, but it is better than the previous estimate, which showed a contraction. And given that we have the sequester deadline, does it raise the risk of recession here in the U.S.?
It definitely raises that risk because the sequester is probably going to shave off between 0.5 and 0.7 of GDP. It's going to increase probably the unemployment rate. Numbers vary widely. Some people say it's not going to increase unemployment, but I do think that it's going to be a negative feedback loop that inevitably will take hold. There's going to be less demand, and that will probably make unemployment worse.
And Sandra, now that we've assessed the recession risk, what about the downgrade risks?
It's definitely a risk, and history has shown if one rating agency downgrades, others will likely follow. It doesn't mean that it's going to necessarily have dramatic consequences. We've seen previously the market reaction was moderate, but we see everywhere increasing downgrades, one notch after notch after notch. I think eventually we may see a tipping point. We can't rely on the fact that it's not going to have adverse consequences.
And Sandra, when it comes to Washington, D.C., last-minute deals as well as procrastination is something that we're very familiar with, especially considering the fiscal cliff. But what do you make of what we're seeing right now?
I think it's a problem that's self-induced, it's quite irresponsible, and it's very uncivilized. I think it's politicians' jobs to come together and create compromise, and the nature of compromise is nobody's going to be 100% happy about it, but it's not a science, it's an art form, and that's what they get paid for. If it were a company, you'd fire them and say, you didn't perform. So I think eventually that whole culture needs to be changed. We can't live by this, that we have to incentivize ourselves with consequences that are so dire that we're forced to work together because we see obviously that doesn't work.
And Sandra, we've spent most of the interview focusing on U.S., but I do want to switch our focus on over to the Eurozone. Now, earlier this week, following the Italian elections, we did see a sell-off here in the U.S., and global equity markets also fell, but we have recovered from that weakness. So as we take a step back and look at what's happened in Italy regarding the elections as well as the bond auction, what do you make of what we can see going forward?
Well, it's quite problematic in that the economic situation in Italy is dramatic. We could argue that we're already in a depression because we've had 6 consecutive quarters of negative growth. Usually depression, you say after 2 years, credit is not available. We have a financial crisis. The unemployment rate has spiked. So these are really fundamental problems. And now with these 3 parties having come in, that's going to create stagnations and further problems. I think it's a transitional point. That's not a result. We don't really know what's going to happen, but if they don't abide by the reforms, then the ECB can hardly help that country. And the ECB just bought time for the politicians to create solutions. And we have seen a complacency, and now in Italy we see that the problem is getting more serious.
Well, we have a lot to look forward to going forward, so thank you so much for joining me on this Thursday, and thanks for all your insight, Sandra.
It was a pleasure. Thank you, Remy.